Good boys, what's good? We back at it with another trading recap. You know what I'm saying? So let's get right into it. There's no introduction, no introduction needed. My bad with the stutter, but you know what I'm saying? This last week's trading wasn't as bad as I thought it would be. I wasn't really expecting as much trades. I wasn't really expecting much, so it's all good. It's a quiet week, a little bit of a quiet week last week. So unfortunately, I'm gonna have to spill the juice, spill the tea. I was down 2% last week, so yeah, unfortunately that's the case. So we gonna hoop, we gonna ball, man, we gonna ball. So let's start off with this one right here. First trade we took was a loss on Hong Kong 33. As y'all can see, my thought process initially from with this trade when I'm looking at the daily time frame, I'm looking at it as alright, cool. It looks like we are reacting from some sort of demand. I don't know if it's yeah, it could be some sort of demand. It could be reacting from some sort of demand, and we took out liquidity right over here, as you can see. Sorry about that. As you can see, looks like we've taken out some sort of liquidity right here. And as y'all can see, the day time frame, we just continue taking out highs, closing above them, taking the highs, closing above them. So these are bullish breaker structures, right? As you can see, we're just straight bullish, man. So we had a bit of a recession phase right here where market just dumped and we're in a bearish trend, but now we're back on a bullish trend, as you can see. And then now, as you can see, right, we sort of closed below it, but that's after my initial thought process. So this trade is what it is. We took our highs and liquidity right below these lows, but unfortunately, market decided to just do the opposite of why I intended. So it's part of the game. Yeah. So that's like how I look at trend. Like if I just go on higher time frames, most likely a daily time frame, because the daily time frame has more clear price action. Whereas if you look at the weekly, like I mean, it looks nice. The weekly looks nice, but go on some sort of higher time frame, whether 4 hour, whether daily. Just look at bias, have some context of the market. Just don't straight jump into the 30 minute. Be like, okay, let me find some. Supply. Let me see supply. I see supply. Let me enter shorts. No, that's not what we do, bro. That's not what we do. No, that's not what we do. We have supply here. Look. Liquidity. You see, liquidity, top zone. Yeah, yes. Oh, liquidity behind. Yeah. Break structure. Another breaker structure. Thank you, come again. Oh, yeah. Break structure. And then, break structure. Let me enter shorts. Yeah, we have shorts. Look, we downtrending. No, goofy ass nigga. Like, what you expect, bro? Like, that's what I'm saying. Don't look straight. Like, trade with context. Trust me, it works way better than this. Old me, I would have taken this. I swear to God, like, old me would have taken this. I'm not gonna lie. Since I added context to my trading and added looking at not added but more so of looking at higher time frames instead of just looking at just the 30 minute and see where I could. You could do that with the 5. It's calm. You could do that with the 5. But even with the 5, if you want to maximize your results, you need to still have you need to add more context to it. You need to look at higher time frame, minute 30, minute 15, hour 1. Like, you can't just look straight. Like, you can't trade so you have to holy starter, because this is like noise pollution, bro. I'm not gonna lie, bro. You need to trade with context, bro. At the end of the day, you just trade with context. But if you want to use confluences, or if you want to look at other charts that sorry, what's that called again? A correlation, whatever it is, man. If you want to look at just whatever it is, so context, what context? I know this is bullish because, come on, bro. Reactive from a high time frame demand, we had this bullish expansion phase. We retraced a bit, continuing up, and then we just sort of ranged right over here. We ranged right over here. We arranged it right over here, and then we retraced one more time, once again, and then we took up this high, closing above this high. Then once we came back, we started to drop a bit, and we dropped a bit. Then I'm expecting, okay, we took out these highs, we took out basically, if not the majority lows that we need to take out. We took out liquidity right over here, tapped in this demand zone. I'm expecting a bullish reaction, but at the end of the day, I didn't get that. It's part of the game. It is what it is. I'm not getting mad. But losses are part of the game. As long as I'm not going against my trading plan and I'm just trading with context and actually trading with my model and everything, and it is what it is. Second loss. This is an unfortunate one. I don't know how I got stopped out, but damn, this is so unfortunate. Like, that's the type of reaction everyone has. Like when a trade goes their way, but it's something has to edge them out. Like it's like it's like hitting. Oh, bro, I don't even want to explain this shit, bro. I don't even want to explain this shit. But yeah, unfortunately, I had my stops right below these. Yeah, I think it was like, I don't know. I still managed to get stopped out for some reason. I don't know. It was my stops were like this, right? Were exactly like this. But the main reason why I got stopped out is because of spreads, right? GPND typically has a high spread, right? If you can see up here, I don't know if you can see my screen cursor up here. Look at that. The sell to buy ratio is like it's just too high. So it's not like I'm mad about it. It's cool. Like as long as I'm trading correctly, right, and I'm not doing anything retarded, right? It's cool, right? But this is lesson to learn, bro. Especially for high spread to sell buy ratio pairs. Make sure to have a good stop loss, bro. Make sure to have a good stop loss. Like I'm talking about having a good, well measured stop loss. Like this one was carelessly. I'm not gonna lie. Like sorry about that. You see how the fact that I'm not looking at why I lost trade, I'm not even looking at like, oh, I got no. It's because I know the reason why. It is still valid. Look, it still hasn't took me out on trading view, but like I said, I trade on a broker, right? I trade on a prop firm. They'll stop me out because the spreads are different. The spreads on here and over there. Even if I was trading on this spread, I'll still get stopped out because of how huge the spread is, right? I think the spread difference is around like 30 points, 40 points, whereas EU is like what, one, like let's say for example you buy at what one, let's say 1.16 for, I'm just using the example, bro. The 1.16, right? Let's think about this is a dot. This is buy, and then sell would be the same price, like 1.1. I don't know. I hope y'all can under read this. But I'm not gonna lie. That's four is alright, buddies. Yeah, 449. Look, this is a 1 point difference. My bad. I'm not gonna lie, but on some pair like this, y'all can see right now, 892-937. Like, what? This is not gonna save me, bro. Maybe if I was on EU, all right, bro, all right. But this is not gonna save me. I'm not gonna lie. Like, I'm not mad about the loss, right? It's cool, but this is eye awakening for me, right? Any high spread, but even I did give it enough room, but that's not enough. I'm not gonna lie. 2.6 was not enough. Generally, I think for high spread pairs, I'm just gonna have it more than three. I'm gonna do like 4 or 5, bro. Cause you could go, anything could go down, man. But now, unfortunately, yeah, you see, as y'all can see the sell, bro. Let me explain my thought process and why I didn't believe in this high time frame demand, even though it's still held. I looked at it initially like this, right? When I'm looking at the daily time frame, I still believe in order flow, right? I still see what order flow. Like I'm looking at a trend right now, right? So this is my initial thought process. This is too way too advanced. I'm not gonna lie, but you guys gonna have to stick around. So I see this, all right. We haven't taken out any of these highs. I see this, right? I see these resting highs, right? Okay, we took out this one. This is initially bullish, right? But when I see this, right? I look at this internally, externally bullish. I already know GN is externally bullish, right? I was just trying to get that small. Like at the end of the day, I don't tend to look more than I don't like look more like I don't holy stutter. What am I even trying to say? I tend to look mainly on a daily time frame. I don't really like looking at that weekly, monthly. There's not much to look at, right? Whereas the daily, you get some context. So my initial context was like, all right, cool, bullish break structure, bullish breaks. Okay, I know we're bullish, right? I know we're bullish, but internally we could get some sells, right? See, that's why you never marry yourself to a bias. That's just like never marry yourself. I mean, unless if it's obvious, like for example, all right, cool, we know we're bullish. All right, this is externally. I'm just talking about inside the trend, right? Internally, we set to highs. We didn't close above this high. We got stuck right here, right? Not only that, we got stuck. We started making lows after that. So right after that, what happened? Bearish break of structure internally, internal break of structure, internal bearish break of structure. What does that mean? We're not taking out any of these highs. We're still stuck in this supply order flow, right? We're still stuck in this supply order in general. I know it's gonna invalidate, but as if like, what my thought process was, right? Boom. Okay, now we're bearish. Okay, cool. That's nice. If we took out these lows, okay, well, I would have been saying, oh, we're externally bearish. We're externally bearish. We took out lows that we're not supposed to take out. Internally, we are. Currently, we are. I don't know now. Now the trend is mixed. But for now, this is like when I look back on this. Okay, matter of fact, let me go on replay mode. It'll be way better for me to break it down. So you go right there. Now we look at the market. Okay, cool. We are in a bearish trend, an internal bearish trend. Can we catch some shorts? Right here also, we're reacting from another supply. So not only that, I'm looking at like this. Okay, cool. Now this is my context. Let me add more context to it. I see a fresh supply right here. We didn't take out these highs, right? A fresh supply. I don't even need to mark it up. Y'all can see it right here. We have this fresh supply right here, as you can see. Boom. Not only that, prior to this supply, we had an internal what? Internal bearish structure broken. Internal break structure. But that without taking any of these highs out. So what does that mean? What does that indicate? We are bearish internally. I didn't say externally. I didn't say we're bullish. I didn't say we're still bullish. But I'm just looking at the market as this is what I'm currently seeing. Forget about this. I'm not looking at this. I'm looking externally. I'm looking specifically in the span of this and what in a month or two. What is this? September. Give me 1 second, guys. Almost 3-4 months of data. All right, look, I'm just looking at this, right? I'm looking at it like this, right? We're extremely bearish. All right, we're not taking on any of these highs. We swept highs above here. It led to another sell-off. Build a fake buyers, another drop, a sell-off, another recession, and then right here, same thing, another pullback to faking out buyers, early buyers, thinking that we're still bullish. No, it's not. Market needs to recorrect itself. It gave us a fake pullback, fake pump. Then we started consolidating a bit, right? We had this consolidation right here, over here. I can explain it right now again. Once again, we had highs above these highs, above these highs, right here. Once again, another break of structure right down here. Another internal break of structure, another internal break of structure, right? All right, cool. We tapped in the supply. We sell off. Okay, cool. Now I know that we're internally bearish. All right. So what makes me think? What made me take the supply? Look at this. Now when we see it like this, okay, we are reacting heavily from the supply that I marked up earlier on the daily time frame. We're currently looking at 30-minute. We broke in these bearish lows, which these are really external. I'm not gonna lie. If you really look at this specific price action on the higher time frame, we just bullish, right? We're bullish, right? But the second we take out an external bearish external leg, we're just gonna have to continue. We have to continue with order flow, right? This is how I view the markets, right? We were initially bullish, right? We were initially bullish, right over here. Okay, I'm like, alright, I'm fine. I'm going bullish. But the moment we take out any of these swing lows, I'm like, alright, cool. Market needs to recorrect itself. The moment we've taken out these swing lows, right? We took out one right here. Okay, right here. This is not really low, but we took out this one right here. We took out a couple of these these trend line liquidities and whatnot. That's just another variation of liquidity. The moment we started switching the trend and I actually started looking for downside is when I said, all right, cool, that's enough. I've already seen externally we are internally bearish. Externally on the 30-minute we are bearish. So external trend we're bearish on the 30-minute. Internal on the daily time frame we're bearish. So now that I know I have two biases together and I know what I'm looking for, I'm starting looking for sales. I then mark out this high time frame demand, but I know this high time frame demand had some gaps to fill. Number one. Number two, it wasn't really a sufficient demand. So I'm like, all right, cool. Let me just take my chances. Let me take my risk, and I see a valid demand, a valid supply. At the end of the day, sellers are in control in this market right now. Buyers are still there. I'm not gonna lie, buyers are still there. Buyers can take their time. They're not in a rush to buy at this price. They would want to be more patient and buy at a discounted price. And then boom, this is what I see right over here. Demand. This is my entry model. Boom, boom, boom. I don't need to explain it too much. This is like a simple entry model. Anyone knows this. It's really simple. Then once we do is we tap into the demand. I'm sorry, into the supply zone. Why is it tweaking, bro? No, I need to skip this thing. And then as you can see, sorry about that, guys. Then you can see, let me go back real 1 second and then play it for you guys. As you can see, voila, 1 to 8.84 RR. That could have been made. Voila. Alright, boys. I'm gonna cut short here. Yeah, this is like the only 2 trades I've taken. Unfortunately, one of them could have led me to like 1.8 RR, potentially 8R, but unfortunately I lost on this one, and the other trade I lost. So unfortunately, negative 3% week, and yeah, that's how oh my god, holy stutter, man. That's gonna do it. So yeah, y'all take care, man. Y'all take care. Hope y'all have a good, blessed one. And yeah, man, take care. See you then, bro. Oh my god, see y'all.